Hello, fellow traders worldwide. This is Gabriel again here with another video, and welcome to my channel, Forex.Real.Trader coaching sessions. Today's video is basically about a very subtle but powerful pattern. I am talking about the bearish Harami candlestick pattern. So I'm going to explain how it works, its identification, and how we can combine it with other powerful indicator, right? And how we can spot it as well, right? So without further ado, let's observe today's pattern. Basically, the bearish Harami pattern is a bearish reversal candlestick, right? That appears at the top of an uptrend, signaling a potential shift from bullish to bearish, or also in a correction. And today I'm going to show you two examples on the correction and on the down trend. How it is constructed, as you can see here on the screen, it is formed by basically a large bull candle. All right. So let's do this thing here. So we can see that there is an uptrend here. Okay. So this uptrend is basically my current observation. And there is a bull candle. After that candle, it has to be a bearish small candle. The important thing here is that it can be contained within the bullish candle. Okay, it can be interpreted as a engulfing. Yes, could be as an engulfing in a scenario. However, not necessarily it has to open here. It could open here right on the same verge of the bull candle. Okay, so that is a key characteristic that we can observe, right? So let's see the charts in order to spot this pattern. I previously searched my charts in order to spot it. So let's take a look at this one. This is a very interesting change of direction. So I can observe that my trend was somehow going up, but then it started to shift. I can notice here EMA crosses, right? Here is a very, very nice Harami, right? This is the Harami, the bear Harami, that we're going to analyze. So let's say, is our trend currently on this very moment is in a bull momentum? Yes, this is a bull momentum. I have a large candle. Yes, I have a large bull candle. And my bear candle opens, and let me show you with the crosshair here. It is opening exactly at the same level and closing exactly at the same level. Let me remind you something that I have mentioned in previous videos. Remember that bull candles, right? Bull candles open low and close high, right? And bear candles open high and close low. In this order of ideas, I can see that my bull candle, okay, open low, okay, my bull candle opens low here and closes high. And my bear candle opens high and closes low. And is accomplishing what I need to see, right? That the charts need to show me is this, that my bull candle is bigger than the bear candle. Okay, check. The second thing, both of them have their open and close at the same level. Check. The bear candle is contained, kind of engulfed, right, within the bull candle. Check, right? So that is how I'm going to spot it. So, okay, clear. So now I have my Harami pattern. So Harami checked. Now, again, I say this. It is irresponsible to say and to operate based only on one indication. In this case, the indication is what? My bearish Harami pattern. No, I cannot trade based only on that because, of course, it's very easy for me to show you things here, right? Yes, okay, here is the Harami pattern and it's going to go down. Yeah, because I already see that, right? So it makes no sense. So the thing here is that every time you spot a pattern, what you got to do is first to be patient. Second, to be free of bias, right? So you analyze the pattern. This is one thing. Okay, what? That I have my Harami, but I need more confirmation patterns. Later in the course, I will tell you about how to design a sound trading plan. And based on the trading plan and all the indicators, all the signals, you can trade. However, in my videos, I like to tell you in every case how to place a trade as a kind of training, right? Because it's something that will have to be used all the time. We place trades always following the rules. Let's suppose that this trade was according to the rules of my trading plan. So how to place it? The very first thing that I have to do is to wait for confirmation, right? What is that confirmation? Okay, first, that the Harami per se, these two candles, are formed, right? That is the first. What is the second thing? Okay, the Harami is subtle, but is powerful when combined with exponential moving averages or simple moving average as well. And coincidentally, we can see here a very interesting pattern with the SMAs and the EMAs. Can you see this blue line here? This is my SMA 200. And there is a cross, right? There is an EMA and SMA cross, right? This one here is my EMA 50. So the EMA 50 is below the SMA 200. That is a good indication that is changing the sentiment from bullish to bearish, right? And somehow this one's in here, both of them, the EMA 50 and the SMA 200, work as a resistance level for my Harami. That is a powerful indicator. Now, if I want to combine with a Fibonacci, so I trace it, don't worry, later on in the course, we will know in detail how to trace, how to spot with the different tools. This is just to give a little more of support for this trade in the eventual case of taking. So this is it. I can see that there is a Fibonacci level is that 23, right? The 23.6. All right. This is not a very meaningful Fibonacci level. However, it's working here as a kind of resistance, right? That is a good thing too. But I would spot it really, okay, with what? With my EMA and SMA. All right, let's say that I got confirmation, okay, from other indicators. So what is the proper way to trade it? Simple, right? So what I'm going to do is first establish my entry point. It would be ideal to set my entry point. There are two ways. You can wait for the third candle, this one, for confirmation and place it here. Or if you are a little bit more, okay, you want to take more risk, but always waiting for the confirmation of the second candle. So you can place your entry point around this part, around here. All right. So that's your entry point. Always remember that I avoid this kind of trading that is by impulse. So no impulsive trading. Always a trade, I need to bear in mind three aspects: confirmation, right? Stop loss and take profit. So don't you place a trade like this. So you set the entry point and then you calculate. Don't worry, later on we will know how to calculate this. I will calculate, for example, my stop loss. I can say, for instance, let's drop it here around 5 pips above. So it's giving enough room, right? So this is my stop loss. Now, if I have, remember what I mentioned in previous videos, if my stop loss, okay, my ratio could be, for example, my ratio could be 1 to 3. So if my stop loss is 5 pips, right? My take profit might be minimum 10 pips. So it could be 10 pips or 15 pips, okay? So let's place it 15 pips. So I said here, my take profit 15 pips. So 15 pips would be around here, right? This one here. So I would set my take profit around this point. Okay. And this could be a nice setup. Check this out. In the moment that I placed my entry here, okay, the price, in the moment I placed my trade here, because what was when it closed, right? So I set it here, okay? Could be like a direct trade, okay? Market trade, or like a sell stop, or like a sell limit, depending on the moment of the trade that the platform allows me according to the moment of the price in the instance I'm trying to set the trade. But let's suppose that I set my trade here. The next candle, I am working with the 15-minute time frame, right? The next candle somehow retrace a little bit. This candle was, in a moment, was a bull candle. In certain moment, this candle was bull, right? The top of this candle was this one, but it never reached my stop loss. So I had my safe net, okay. Then this candle came back, right, to the moment of bear. And after that, the movement was a clear, very clear downtrend. And touched here, in this moment here, it touched my take profit. So here the profit might have been 15 pips. And it didn't retrace that much to touch my stop loss, right? Again, this is just a hypothetical scenario, okay? If just taking into account if all my indicators, the tools that I have in my trading plan were fit, right? It's not only the Harami bearish candle pattern. Remember, we need many more indications. We need many more signals in order to proceed, right? So that is the reason, because we have to be very responsible when we are trading, okay? So remember, we can work with these kind of patterns, but always when we take into consideration other patterns, right? Other signals, other indicators. Well, that's all for today in this video. So, my dear people, just a little reminder, if you find my channel and the information here provided as something useful, interesting, and somehow important in your trading learning process, please subscribe, like, and share to continue building a well-informed community of retail traders. So see you in the next video. Thank you very much.